Ladies and gentlemen, good day, and welcome to Apex Frozen Foods Limited Q3 and 9 months FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chaudhary Karuturi, Managing Director and Interim CFO, Apex Frozen Foods Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the investor call for the third quarter and 9 months of the year FY23. With us on the call today is Mr. Durga Prasad from our finance team and Stellar IR Advisors, our investor relations advisor. We have uploaded the investor presentation on the website of the stock exchanges, and we hope you have had a chance to go through it. We will begin the call with key industry trends, followed by operational and financial highlights for the quarter gone by. On the demand front, demand from our major markets continues to be subdued due to inflationary pressures that are being witnessed across the world and in developed markets in particular. With regard to the U.S. markets, the inflationary pressures have caused a blip in demand, as a general increase in costs has meant that some of it had to be passed on to the customers. Overall, however, ready-to-eat and ready-to-cook frozen shrimp as a category is growing, and we are hopeful that the inventory build-up in the system would be clearing and pave way for fresh demand to be released. Promotional activity in both retail trade channel as well as food service channels should also help demand for the product. Currently, of course, we have the customers seeking specific requirements on the food side, but on the retail chains, we are having the 2023 buying happening currently, and they are asking us for and we are accordingly in the process of confirming subsequent orders for the upcoming financial year, basically as it starts in the months of March and as it picks up into April and May. Currently having a good on retail segment.
Sorry to interrupt you.
Yeah.
Sir, we are losing your audio. Participants, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, please stay connected while we rejoin the management back to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Sir, you may go ahead.
Yeah, thank you. I'm very sorry. I apologize for the disruption in the network. As I was mentioning specifically about the U.S. market and also our current status with regard to the retail chains, we are we have been getting positive responses already as they are looking for newer orders and for newer product requirements, and which they are currently negotiating with us so that we can fill in their requirements for the upcoming quarters. And with regard to the EU market, the business in the EU has been very steady, and in fact we have improved on that front with our volumes which we have picked up with EU, and we are very confident that we will be continuing to grow our EU market share in a much aggressive manner. However, we are still awaiting for the approval of the ready-to-eat products for the EU market, as the status remains the same as it was for the past 3 years. But the positive sign, of course, is that the EU health authorities have visited India, and we are hoping that now they are going to decide about approving newer facilities out of India in the next 1 to 2 months. So we are now much closer to getting our approval for our EU markets with regard to ready-to-eat products. So, however, the demand from retail section of the EU market has been very steady, as we had mentioned earlier, and we are continuing to increase our EU business much better than earlier periods. With regard to the Chinese market, which was around 3% of our sales, with the opening up of the Chinese economy and the removal of the lot of COVID-related restrictions, we definitely see a revival in demand, and it is going to pick up much better over the next couple of quarters for sure, as they clear up their Chinese Spring Festival or Chinese New Year period holidays once they are getting completed later into this month. So they are placing their orders also. And we are confident that it will be picking up much better over the next 2 quarters. On the supply side, as we had mentioned in our last call, we had challenges in procuring specific sizes of shrimp to meet our orders. This situation seems to be easing to a certain extent, and we are hoping that the harvesting of the stock that has been sown in the season, the seed which has been sowed in the season, will further add to the availability of desired sizes for our key markets from next month onwards. That's from March 2023. Farm gate prices do continue to remain firm on the back of lower supply. In the backdrop of these demand and supply factors playing out, we have been seeing an easing of on several other fronts over the past 9 months, improving payment cycles from the government with regard to our stabilizing of export incentives and the receivables from the government, and all the steps we have taken from a cost and working capital cycle improvement have helped us improve our cash flow from operations. With this, we have strengthened our balance sheet by reducing debt by almost 43 crores in 9 months FY23 from 122 crores to 122 crores actually as of 31st December 2023, which includes 2 crores of long-term and 120 crores of short-term borrowing. And this makes the subsequent quarter we are further reducing based on the positive cash flows which we are having, and our receivables being received much sooner. We believe that we have definitely culminated the capability building phase with the installation of the machinery of the additional 5,000 metric tons per annum, which is regarding the ready-to-eat, with no major capex lined up, and the return ratios are likely to improve as it has in the 9 months of the current financial year, with near to 10% return on equity and 12% return on the capital employed. We also have had some setbacks with regard to the higher priced inventories, along with the higher priced raw material, which we did mention, which was primarily sold in the Q3 of FY23. Let me now take you through some of the operational and financial highlights of the Q3 FY23 and FY23. The total shrimp sales in 9 months FY23 grew by 6% year-on-year to 10,193 metric tons, while the average realization grew by 10% year-on-year to rupees 798 per kilo, translating into a net revenue growth of almost 16% year-on-year to 813 crores. EBITDA grew by 12% year-on-year to 82 crores due to lower finance costs. PAT stood at rupees 399 million, leading to improved return ratios. Within these sales for the 9 months, our ready-to-eat segment registered a growth of 20% on year-on-year basis from 1,912 metric tons in 9 months of FY22 to 2,305 metric tons in 9 months of FY23. Ready-to-eat product share increased to 23% versus 20% with an upward trend, thereby validating our decision to expand the ready-to-eat capacity from 5,000 metric tons per annum to 10,000 metric tons per annum at our new plant at G. Ragampeta. In Q3 FY23, shrimp sales grew by 1% year-on-year on account of muted demand in key markets of USA and EU and supply constraints in specific sizes. Profitability was impacted on account of high raw material costs, even as global shrimp prices were tapering off, as well as I mentioned, some of the higher cost inventories which were there in earlier quarters, and as well as some one-time provisioning of expenses to the tune of almost 1.35 to 1.54. We are hopeful that with the easing of inflationary pressures being seen, the trend continues and has a positive impact on the demand centers for our products. On the supply side, we continue to remain hopeful that the present upcoming harvest season actually, which is from March onwards, will ease out the supply side challenges that we have been having over the past few months. With that, I conclude our opening remarks, and now I request the moderator to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask the question. The first question is from the line of Dipesh Kashyap from Invesco Asset Management. Please go ahead.
Yeah, hi sir. Can you hear me?
Yes.
Yeah, hi. Sir, thanks for taking my questions. I just want to understand your inventory a bit better. So you've given 2 statements in your opening remarks. Firstly, on your gross margins, you said it is lower because you had a high cost inventory. And secondly, on the supply side, you said that you faced challenges in procuring the specific size of order. So if you can please clarify if the lower volumes in this quarter was a demand side issue or a supply side issue?
So we have mentioned that we did have both one is higher priced raw material, which was there over the past 3 months. In the Q3 of this year, which were because of the shortage of supply, as well as some of the inventories which we had from higher priced raw material of the past of the quarters. For example, August and September, especially our pricing was raw material pricing at that time was also high, if you remember. So that is also one of the reasons where there was a dip in profitability. The major factors were that's what we had mentioned.
No, sir. Basically, you're already sitting on inventory, right? So why the volumes were low this quarter? So it was majorly because of low demand, right? But you also said the supply side issue was there.
Yeah, low demand was, of course, definitely our order book has been much lesser compared to the earlier quarters for the Q3, and we are just now picking up our Q4 order book and for the next, for the 23 year. So definitely lower demand also has restricted our volumes which we could sell. At the same time, as you would know that we procure our products which are not feasible from our existing inventory to procure them from the market on a regular basis.
Got it.
So there are each product in the inventory is good to go for the specific orders which are received by the customers as needed by them for different times of the year.
Got it. Secondly, sir, I think the ratio of your RTE products has fallen in this quarter, which has led to your lower realization. So I wanted to understand that your new plant has still not got the EU clearance, right? And you have already increased the capacity from 5,000 to 10,000 tons. So how are we going to utilize it? Because you said like US demand is weak and EU is still going strong, but EU we don't have approval to sell, right? So how are we going to utilize this capacity?
So first and foremost, Q3 ready RTE sales has been a little bit lower, more because we couldn't really do the production because of we also have down periods.
Sorry to interrupt you. Sorry to interrupt you. So once again, we are losing your audio.
Hello, can you hear me now, Dipesh? Hello.
So your voice is breaking.
Yeah. Sorry. Hello.
Yes, sir.
Hello.
So we can hear you, but then your voice is breaking. Yeah.
Okay. Dipesh, could you hear me?
Yes, sir. Please go ahead.
So, as I was saying, with regard to the RTE, we definitely had really a setback, but since we are adding the second line, we had to shut down the facility also for a period. So that also definitely impacted our capacity of RTE products during that period, as you cannot do of production lines in existing facility while the production is being done. So that definitely has hampered our Q3 production ability, but that is being restored to normalcy in Q4 as we are planning to start our trial production also towards the end of this month, especially in March. We are going to do a trial production. Now, with regard to where these products are going to go to, we are still having our major bets on the US market, but definitely when the EU approval fully are received by us by April or May, we are expecting it to be completed because they finished their visit recently, as I mentioned in the opening remarks. We are expecting that once the approvals are received, we will also be diversifying to the EU market, to the RTE products. But however, we are very confident that we would be utilizing the minimum of 5,000 metric tons from the US market alone. Beyond that, it will be spread and it will be split between the US and other markets too. So, except the Q3 period of Q4, because of because we were adding the additional line and production cannot be continued. Because of that, we have had some shortage of production done in Q3, actually, which definitely affected our shipment volumes of Q3.
Got it, sir. Lastly, sir, if you can just comment on how the first crop is looking like, if you can give a YOY comparison for that.
Yes, with regard to the first crop, we have had basically all the farmers very enthusiastic with regard to their pricing, the farm gate pricing being very stable. And so they have been stocking the seed in a very aggressive manner, not only just in Andhra Pradesh. This time, because of the areas in West Bengal and Orissa which did not go for second crop in the calendar year 2022, have also gone for an early first crop this year in 2023 compared to the earlier years, because they were having empty ponds basically for a significant period towards the end of 2022, as they didn't go for a second crop. So all put together, the crop stocking wise, it has definitely been in a very good way by all the farmers, because they are encouraged by the stable pricing which is there, not only in the state of Andhra Pradesh but across India. So stocking wise, it is good. So we are quite positive about the supply improving in the months of March, starting with smaller sizes and subsequently moving on to medium and larger sizes too. But we also expect medium and larger sizes from other states, not just from Andhra Pradesh, but other states also towards the end of March. So that way, we are quite positive about the upcoming crop, first crop of 2023 calendar year.
Great, sir. Good to hear that. Thank you and all the best.
Yeah, thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Participants, you may press star and one to ask a question. The next question is from the line of Nitin from Incred Equities. Please go ahead.
Hello, sir. Thank you for the opportunity. Wanted to understand the inventory bit a little bit more. So currently, we would be sitting on about 200 crore. At the end of Q3, we'd be sitting on 200 crores of inventory, if I'm not wrong?
No, the inventory has been reduced. It is currently it's currently around 170 or 175 crores currently. It has been reduced. A good chunk of inventory has been utilized for the business during Q3 especially, and we are continuing to utilize the remaining inventory to in the current quarter as well as, so we want to bring it down significantly before the peak of the season starts in calendar year 23. So we are putting in all our efforts.
Okay, so by Q1 you are expecting exhaustion of the inventory, if I'm not wrong. Q1 FY24.
Yeah, we are. Definitely, especially the older products and the higher priced products especially. Yeah, definitely. Of the earlier periods, yes.
Okay, so any write-downs on this inventory because the correction in the global shrimp prices?
No, we have not done any write-downs.
Okay.
Because they are done at cost, and of course they are valued at cost or at sale price, whichever is lower. So definitely there could be some items which could be of based on whichever is lower. So naturally, be based on net realizable value only. It will be taken into consideration.
Okay, so this is actually at net realizable value only.
Yes.
Okay. So finally, on your receivables, trade receivables, as of now, what would they stand at?
The trade receivables?
Yes.
It is at, you mean the debtor days are 55?
Yes.
Sorry, 55 days.
Q3?
55 days, plus the creditor, so all it is 45 days. So 45 days for debtor days, sorry.
Okay, got it, sir. So, but absolute amount outstanding with the debtors? Receivable from the debtors?
The actual amount with regard to the receivables from the debtors one, just a minute.
Nitin, do you have any follow-up questions?
Yeah, just a minute. It's 129 crores. Hello?
129 crores. Okay. So last question from my side about the Chinese market. In between, at least in December, there was a fear going around in the industry that many shipments which had gone to the Chinese market, they were refused and the discount on the prices were asked by the Chinese importers. And Indian exporters, because they don't have a presence in the domestic market as a domestic back office in China, they were forced to take these haircuts, you can call them, on their absolute value per container. Is that was there any truth to that, and how is the situation now?
Well, that situation was there, but of course our company, as you know, our presence in the Chinese market, even though it is in the low, around very low percentage, but we didn't have much of an impact because of that. But yes, our company also did give a little bit of discounts in on few shipments, but majority of the shipments were done without any discounts. And subsequently, the business is resumed to normalcy, and currently the Chinese importers are continuing to buy at the current market prices without any issues or problems with regard to receiving of shipments and paying of payments. This, as far as over the past since January or towards the end of December, there's not been any issue actually. So the issue which you are referring to is more pertaining to the middle of Q3 and early part of Q3. It is a fact, which was a fact. But our company did not get much affected with regard to the customers with whom we are dealing with.
Understood, sir. Understood. Thank you so much, sir.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Ronak from Equirus Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. So my specific question is regarding as you have said that the farm gate prices are increasing, whereas we can see that the international prices are still weak. So can you give some guidance on the gross margins in upcoming 1 or 2 quarters, or in mid to long term, how you are seeing that? Any ballpark numbers, sir?
Actually, the farm gate prices have increased from a very low to when it went to a very low pricing towards the end of Q3 and early part of Q4, but that has stabilized. So what we meant was that the pricing of the farm gate pricing was not significantly increasing based on, of course, there is a marginal difference between what the international pricing is on some products. So this is the time where it makes sense for companies like us to focus more on, definitely our game plan of doing more of value-added products definitely helps us out because doing commodity products doesn't really support with these increased farm gate prices. But definitely they have increased from a very low point, which they have gone to, and now they have stabilized to a level that they are very enthusiastic prices for the farmers also to go for good seeding. With regard to gross margins, specifically, we don't expect it to be significantly dropping and compared to our earlier quarters, and it is going to maintain around the same levels.
Okay, so got it. And the second question is regarding, sir, in latest budget, the government has announced some policies. So are we seeing any specific benefits which can be flow into the of our company?
Well, the budget announcements, of course, specifically were mainly for duty concessions with regard to import of inputs, both at the hatchery and the feed industry, shrimp feed industry.
Yes, sir.
So definitely those benefits will impact in the costing of in a positive manner. It should be affecting to that extent. It is not that all the inputs which are used in the hatchery and the feed sector, even though we are not into the feed, but on a general basis, it's not that all the inputs are imported. So it's not that the reduction in duties will have a major impact, but definitely to that extent of the usage of those feeds, or the fish meal or the krill meal which is imported from overseas, to the extent of their usage, definitely it will help in reducing the cost of the feed and the seed. and we are quite positive that it will definitely help the primary producers going forward. But as I mentioned, it is not that most of all the costs involved in the hatchery and the feed are not at a concession. It's only the imported inputs, which are, of course, of a minor percentage. Definitely, that much impact will be shown for sure. We are positive of that part as they take effect, and as the newer consignments of such inputs make into the country. Definitely, it will help in reduction of cost, and thereby such cost savings, unless there is any other adverse effects. But any such cost savings, definitely we are hopeful will be passed on to the primary producers or farmers, and they will benefit out of that. And thereby we can remain competitive in the global market when such cost savings are passed on to the customers and consumers thereafter. Definitely.
Very well understood. Very well. Thank you, sir.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Varun Kia from Dimensional Securities. Please go ahead.
Hello. So I have two questions. One is if you could provide some guidance on the utilization levels for the next year, given the overall demand scenario. And secondly, if you could provide a breakup of revenues customer-wise, like from restaurants, retail chains, and via distributors.
Yeah, sure. With regard to the utilization part of next year, we are nearing completion of our addition of our ready-to-eat line, ready-to-eat cooking line towards the end of this month, and we are starting our trial production towards the end of this month, and we'll be taking it up more aggressively in March. We are currently for the 9 months, of course, we have utilized 47% of our capacity, total capacity. But the thing is, now with this added line, we are quite positive that we will be focused more on ready-to-eat products, and we will be utilizing at a much higher rate of the ready-to-eat capacity of 10,000 metric tons, which will be completely available from the middle, or rather, let us say, from the beginning of the financial year FY24. So we are quite positive of utilizing them, and our focus will be to increase the utilization more in the ready-to-eat and higher value products, even if it is at the cost of reduction in capacity utilization of ready-to-cook, so that we can not only look at revenue earnings of the company, but also the margin, as well as expansion in the margin growth. So we are quite positive, and we are also very aggressive about the outcome. So definitely we are positive with regard to the capacity utilization, which will be not just split. Of course, USA will remain our major market to support such capacity utilization. But however, we will significantly be increasing our other market shares too, EU as well as other markets, not just China, and other markets also. So we are quite positive about it with regard to these changes which are being done in our infrastructure within our main facilities, as well as the supply side scenario. Of course, completely supported by the customers, our existing customers, as well as newer customers, which we are bringing them on board from other markets too, which we are expecting them to conduct business with us within the next 1 to 2 months, which we are quite positive. So overall, ready to eat, we are very confident that we will be looking at between 50 to 60% minimum in the first 6 months, and thereby we want to push it up to 75% of utilization on ready to eat alone for FY24 especially. We are quite positive on that. So even as I mentioned, even if it is at lesser utilization of ready to cook, because in the whole of the in the whole interest of the company, we feel we should utilize more of the ready-to-eat. So that is on that part. But with regard to your second question was also on the, I think,
breakup of revenues, customer-wise.
Customer-wise, major market share was from the US, as you know. But within both retail and food service, currently we are in this year, FY23, we have been having it split between both retail and food service customers. Food service, mainly restaurant chains, of course, through their distributors. It was almost half and half. This is mainly in the US market. But in the EU market, the business what we do to the EU, majority has been retail. Almost 70% has been retail. I think around 35% only has been with food service in the EU market. But in the US, it was almost 50% divided. And this year, we feel we are confident based on the inputs what we got so far from our customers that we will be able to increase our retail business much further this year. So we are, of course, we wouldn't we are not prioritizing one over the other, but definitely we are putting in our efforts to improvise the overall volumes spread between the retail channels as well as the restaurants. Food service sector also. So we are putting in our efforts to increase on both sides. But on the EU side, we are somehow more positive and more inclined towards retail. As you know, markets like China, it's all commodity based. It's mostly goes into distribution. But the US, we are putting in efforts for both. So we are maybe for some parts of the year, depending on the seasonal consumption, retail will be much higher. But during summers, when the sales are more through the restaurants, food service also picks up. But overall, it is split between both of them, for our company specifically.
Okay. And by when do you see the EBITDA margins going back to the 12% plus?
Well, as we increase our production capacity, utilization of our production capacity, and as we see the demand also picking up, especially, we are pretty confident that the inventories which have been definitely high in number at the destination, and as they are being consumed, we are quite positive for the summer, upcoming summer. Definitely, we are expecting prices to be more stable. Of course, even though the product supply is also there, but mainly the inventories as they ease out, which is going, I think we expect another 3 to 4 months. But the summer of USA and European markets definitely is a good, will give up for sure for the consumption in general, and we are expecting demand also to pick up. So thereby, as the pricing also goes up, and since our company specifically focused on the ready-to-eat and higher value products, we are pretty confident in the middle of next year we should be able to do it as we push more of those products especially. So we are expecting that, and as we focus more on that, I'm pretty confident we can maintain it on the overall average margins, like you said. But it depends how soon we are able to move most of our share to ready-to-eat and more to value-added, higher value products for sure, more towards the middle of the next year.
Understood. Thank you.
Yeah.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Bala Murli, individual investor. Please go ahead.
Hi, good morning, sir. So I would like to ask a question regarding this ready-to-eat segment. So this quarter we have seen a significant drop in volume.
May I request you to speak through the handset, please?
Yeah. Regarding the ready-to-eat segment, in this quarter we have seen a significant drop in the volume, sir. So going forward, how it will be and how even the upcoming capacity also coming. So is it possible to increase the volumes?
No, yeah. In this quarter, the ready-to-eat volume was mainly reduced, which we had explained to the earlier callers also, is mainly because of the shutting down of the capacity of the company for a period towards the end of Q3 as well as part of Q4, because we were expanding our lines of the ready-to-eat. We cannot be running the existing facility while the expansion was happening. So because of safety norms and to maintain hygiene in the production, so we had to shut it down, and that is one of the reasons why we could not really produce ready-to-eat products in a significant manner in Q3. But we see it definitely increasing now in Q4 as things got all set up, and definitely it will be increasing from Q4 and Q5. We should be doing much more than what we did. I'm very sorry. Q1 of FY24, we are very confident that we are going to do much more production than what we did in Q1 of FY23 for sure. So we are going to increase utilizing both the total capacity of 10,000 metric tons when it is available, completely available towards from the month of March FY23.
Yes, a small follow-up on that, sir. So at the beginning of the Q4, the existing capacity was under down. So is it operational now?
Yeah, it is. Now it is operational. As I said, towards the end of Q3 and beginning of Q4, we have had to do partial shutdown as the new capacity was being installed. So that definitely created a handicap for some period with regard to ready-to-eat production. That is one of the primary reasons where our ready-to-eat products sales, and even before that, the production also got a little bit handicapped. But that's been restored, and this quarter, we are getting it back to normalcy. Now it is restored, and towards the end of this quarter, in March, we will have the entire capacity, 5,000 plus 5,000, 10,000 available completely.
Yeah, that's very helpful, sir. And one more thing, could you please quantify the margins for the ready-to-eat and ready-to-cook? What would be the difference? And what is if you can provide individual margins, that will be helpful.
No, yeah, but on an average, we look at it approximately in a normal case, it would be anywhere between 50 cents to $1 per kilo. But in subdued demand, maybe even if it comes down, it is around 25 to 30 cents per kilo minimum difference will be there between ready to cook and ready to eat. So at any given point of time, we have around 50 cents per kilo difference on an average. So because it includes multiple sizes, but on an average, if we see as a general thumb rule, 50 cents per kilo additional margin will be there.
And one more thing on this subsidy import duty which was reduced on the feed raw material. So it is mainly beneficial and it will be absorbed at the primary producers and it's beneficial to them. And is it we can also have any benefit from that by having some
when it is benefiting the primary producer, it is definitely encouraging them to look at good farming and also increasing the production hopefully, and that definitely helps the company also in one way so that we could have stable supply situation.
Regarding the supplies, as I see on the ground, most of the primary producers have aborted this farming recently because of this lower prices of shrimp and higher feed cost. How is it now on ground?
The farm prices have stabilized. They have increased. The farm prices are very encouraging to the farmers, and they have been stocking good for the past 45 days. They are continuing to stock even as we speak. So, and from all across all states, not just Andhra Pradesh, but Orissa, Bengal, everywhere they have been doing it. And as I said, the current pricing is very stable, and it has been encouraging for the primary producers or the farmers to go for stocking.
And lastly, on this incremental revenue from this 5,000 ton additional capacity for ready to cocoa, could you please any guidance on that?
The incremental revenue for as a
Can you hear us?
Yeah, sorry. Hello?
Yes, sir. Go ahead.
Yeah. So the incremental revenue with regard to that, if we utilize the 50% of the additional capacity, approximately that gives us additional around 200 crores of revenue on export sales alone, if we are utilizing in the first year, and thereafter it is going to be picked up much higher for sure. But we see an incremental revenue of minimum of 200 crores only to that aspect.
Thank you. Bala, sorry to interrupt you. I'll request you to come back and join the queue for a follow-up question. Ladies and gentlemen, you may press star and 1 to ask the question. The next question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Thank you. Hi, sir. Wanted to understand from you the trajectory for farm gate prices on one hand and the realizations in the US on the other hand. As in, if you could provide some trajectory for last 3-4 months, how things have been panning out on this pricing front. For maybe as an example, it could be 60 pieces per kg for that category of shrimps. Could you help with some numbers to understand, what was the scenario back in August, how it turned out, what was the bottom of these prices on farm gate side and the realization front, maybe anywhere in October, and eventually now where they are. It would just help to understand the scenario a bit.
Yeah, I think specifically on the specific sizes which you said of how the pricing moved on with regard to the raw material over the past 3 to 4 months, and as well as the sale prices. I think we would provide that information offline, if that's okay. We will compile it and provide, and also we'll make it available along with the in the transcript, if that's okay. We will provide it to you offline.
Sure, sir. Another question is on viability. So there is on the farmer side, there is this aspect of prices moving, input costs for them moving up. So from here on forward, but like there is that basic understanding that once the pond is dug, there is that stickiness of a farmer to stick to producing shrimp in general. So going forward, how do you see the industry panning out? What are the levers which could play out to make this ecosystem sustainable, right, in long term, rather than so realizations like we see in historical realizations, they are quite sticky at $9-10 range, right? It's only once in some 4-5 years that you'll see that going up due to some unforeseen supply side event, right? So if realizations are the same and input costs go up in a way, like feed players could increase prices due to their input pressures and so on. How do you see the industry stabilizing in medium term, short term, and what will drive this industry towards a sustainable growth in long term, in your opinion?
Okay.
Yeah.
The first thing is not every cost at the farm is attributed to seed and feed cost alone, which on the production side, at the raw material side, because there are also costs related to land lease or power, electricity costs, and last but not the least, one of the major factors which plays a role in the cost of production at the farm is also disease. because if the survivability of the shrimp or the product in the pond is low, naturally the costs would actually be going up on a per kilo basis. Whereas if the survivability is reasonable or it is good as per expectations, definitely the cost of production is much lower, even in increased feed costs. Example, since you mentioned feed, as I mentioned a few other callers about the indirect benefit which the farmers get is in the reduction of those duties of the inputs. Even though those inputs are not the major components in the feed manufacturing or the seed manufacturing, they are part of those part of many inputs. Definitely, that cost could be passed on, subject to overall conditions. They could be passed on, and cost reduction could be foreseen among the farmers as the new reduced price newer inputs come into the country. That is one part. But main part is land lease has increased significantly over the past few years, and also, as I said, as the survivability reduces or the mortality increases because of disease, that plays a very key role. And currently, of course, the government bodies, which are also very focused on this sector, are also looking at the disease management and disease control programs. Hopefully, they yield some results, if not in the short term, but at least medium term, and thereby giving us, some guaranteed results, means guaranteed crops, where a good expected survivability is being maintained. Definitely brings down our cost of production at the farm level, thereby keeping India's shrimp products to be more competitive across the world. And at the same time, getting to your question about $9 to $10 on an average, that has also got to do with how much of products we are doing of the lower value, or rather, lower value means it needn't be lower sizes. It needn't be smaller sizes. It can also be the type of products. If our company's production was dominated by with at least 20% to say commodity markets, I don't want to mention any specific country's name, but commodity market, low product value is very low. It wouldn't even have been $9 to $10. It could have been even much lower, the average value. So it depends of how much we are doing. That definitely plays a role. So on the costing front, as I said, the major factor which plays at the production level is also survivability, and not just the feed, but also electricity, which is there, the lease rate, which is there, land lease rates. They all play a role, and added to all this, finally, if the survivability doesn't happen, definitely it increases the cost of production to the farmer, beyond 250, 300 rupees per kilo. So I'm just giving an average number. But typically, if the farm is targeted for a cost of production of around 200 to 250 rupees, and in a market scenario where the pricing is 300 to 350, or then definitely that margin also is maintained at the primary producers level, and it will be continued to be encouraging for them to continue production. So because it is definitely a worthwhile activity for them when they get good results. So that is the situation with regard to the supply side. Now with regard to our products, as I mentioned, with regard to the products what the company produces, how much percentage we are able to diversify more into higher value definitely increases ours from 9 to 10. It could also be increasing it to $10 to $11 per kilo, or $11 to $12 per kilo. Depends on how much percentage of our production or how much percentage of our sales is being focused in that direction. Definitely. And I mean, as I said, if we continue to have our main focus on commodity, it will even come down to $8 or $8.50 on an average. But the more we do, definitely we are going to increase our average realization price for sure to make it higher. So that is both on the supply side. It is the costing which is greatly influenced by the survivability or mortality of the shrimp in the pond, primarily because of disease. And of course, government is also focused on those aspects. And on the sales side, on the market, on our sales side for our company, also it is mainly dependent on the how much volumes of higher value products which we are producing, which we have been advocating since many years. We have been telling the more we give a push for such products, the better it should be for us. So for any company as such.
So the new crop which farmers have gone for in January, so expectation basically is for survivability to go up, is that the farmers would have stocked lesser per square meter. That is the expectation going forward, right?
That was the expectation when they were planning to stock, but we heard mixed news. We didn't hear everybody reducing their stocking number. We have heard mixed news from different areas. Some of them, they felt very encouraged with increased raw material pricing and they just went ahead with their older practices. We also heard some areas definitely have made a huge correction in the number of amount of stocking which they were doing in their ponds, and they reduced their stocking densities. Thereby, their idea is to grow to larger sizes, and rather have low biomass and lesser risk and lesser cost, thereby lesser cost, and thereby have a better survivability. But yeah, it depends on area, different areas. Even in one state or one district, the strategies are different for different farmers. That's why I said we have had mixed news received. I mean, different types of, some changed their strategy, some went ahead with their older methods of farming. They did not change their strategy. So it is a different scenario. So we should see how each one of them results, because weather also plays a good role. Typically, around this year, it is the weather gets hotter, but warm rather, but it is different now. So we should see they are having good growth so far. The feedback what we received so far, and of course there are some more a good number of farmers who are still continuing to stock seed. So we should see how they will be treated with the weather, especially in the month of March and April. We should see how it goes then.
Thank you. So the line for the participant dropped. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Karuturi for closing comments.
Yeah, thank you. Thank you one and all for making it to our quarterly call of Q3 FY23 and 9 months FY23. And for any other queries, please definitely direct your emails to ir@apexfrozenfoods.com. And also you may always reach out to Stellar IR advisors. Thank you very much and have a good day. Thank you.
Thank you very much. On behalf of Apex Frozen Foods Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.